Listen, so you're gonna trade live today, right?
Mm-hmm.
And this is what I want you to do. I want you to use the 2 candle theory on the 1 minute time frame.
Okay.
When you're trading this, I want you to think about key levels, and I want you to think about I want you to think about key levels and where price is reacting from. So as resistance and as support. Okay.
Okay.
And I want you to make a decision in which direction to take a trade based on this information. So if we have our key resistance at the high there and our key resistance support at the low, what would you be looking for at this stage?
Sell.
Okay, you're happy to take sells, fine. So this 1 minute candle has 39 seconds to close. Would you take a sell from here if the candle closed bearish, or would you want the price to come back to this high?
I'd like the price to come back to the high to create the top and show some sign of rejection.
Okay, so if it closed bearish now, would you take a sell?
Yes.
Okay, fine. So get ready. You got 17 seconds to make a decision to sell or buy, but the candle must close in the direction you want to take the trade.
Okay.
You take the trade, just hit buy or sell, it doesn't matter. And then you're going to put the stop loss above or below the previous candle. Now, what we're doing here is we're working on just executing based on a simple thought process, because one of the hardest things is in trading is probably overthinking and creating too much of a scenario. So we're waiting for a bearish close.
Right.
So now we have a new candle open. The candle's bullish. What if the candle starts breaking through this key level? What would you think to do?
Well, if it breaks through the key level here, then we would still have to wait for it to close because it could break in and break back out, right?
Okay, but based on the simple thought process, if price breaks above and closes green and the 2 candle theory, what are you looking to do?
I'm buying.
Okay, good. Because we've simply just broken above a major key resistance in the market, and then you have a break close above a key level.
Right.
Okay, so it'll be a simple thought process. So let's just see what happens. We've got 10 seconds. Remember, you want definitive. Get ready to press a button because this is a 1 minute time frame. You got to be thinking, are you happy to sell with this candle?
Yeah.
Okay, now put your stop loss above the previous high. Yep, that'll do. Now, my thought process on this sell is that I'll clear those for you, don't worry.
Yeah.
My thought process on that sell is that the previous candle didn't close strong enough bearish, in my opinion.
Okay.
Yeah. So you want a full body close more often than not. All right. So don't worry about the outcome of this. We started off at what, 91,000, something like that.
Yeah.
Okay. Fine. So usually you want a stronger bearish close just to give you an identifier mark that the momentum is shifting bearish. Okay. Now this is on FTMO, so the spreads are quite what's it look 098409. But there's about 1 pip spread on EU. Okay. So if you just press
this will be Hugo's way.
Okay. Oh no, it's just a demo account. Okay, my bad.
Yeah.
If you just press Control T to bring open your panel, and if you just do this for me, and just drag this down so that we can see the 2 lines. We don't need that much space. Yeah, you'll just hover and you'll find it. Yeah, let's see. Yeah, that's perfect. Okay, so we started at 90, 91, 290, right? 91, 290. Let me make a note of that. Okay, so what are your thoughts right now?
It looks to be having trouble dropping.
Okay.
It's showing that EU might not be as weak as I thought.
Okay.
From that area.
Okay, that's fine. Now, what we don't want to do is we don't want to be overthinking at this stage. At this stage, all we're thinking about is the fact that at the time of taking the sell, we believed the market was going to go down.
Right.
So our next thought process is what?
We're waiting essentially at this point.
Yeah. Trade management.
Right.
Okay. So now we're looking at the market. We know that price could react from this level and continue bearish. And if it does, there's a high chance that it can get to around this level here.
Right.
Now, once price gets to this level, there's a chance that price is going to start reacting from it because, we've seen reactions from this level before with wick rejections. Do you agree?
Right.
Okay. So once price gets to there, what do you think we can do?
Move our stop loss to break even.
Yep. Because the truth is, if the market's going to continue bearish, then the market's going to continue bearish, right?
Right.
Okay. So at this stage, all we're waiting for and thinking about is just trade management and just waiting for the market just to continue bearish. Now, you can see when you took the sell, right?
Right.
You can see here that the market just hung around for quite a bit of time. Now, look when the candle closed full bearish, what happened?
It left pretty quickly.
Okay, so that's the importance of making sure that we are waiting for these candles to close in our direction that we want to take the trade. Okay.
Right.
Okay. Now, price is coming towards that area here. What are you thinking?
That it possibly could get some reaction from there. We're just kind of waiting to see what kind of reaction.
Well, not really. Price has come to this level. So are you thinking to yourself at this stage, I should go break even now, or do you want to let price dig deeper into that level?
Well, I like the fullness of the last bearish candle close. So I like the market to continue to go below that level.
Okay, fine.
Before going to break even.
Okay. Now, if you went break even now, what would be the difference in waiting for price to pass that area?
If what?
If you went break even now, what would be the difference
between as far as price passing that area? I feel like that if I went break even now, it could come back up to where break even is, take me out, and then continue in the direction.
Okay, but listen, okay, that's fine. I appreciate the thought process. The thing is, though, if the market's going to go down, is there any reason for it to come back?
If it's going to go down, is there a reason for it to come back?
Yeah.
Is that what you said?
Yeah. Should we be waiting for it to come back?
No.
Okay.
Our thought process is that it's going to be bearish. So if we feel that it's going to be bearish, why not set it to break even at this point?
That's correct. That is correct. But don't go break even because you didn't make a decision to go break even.
Right.
Okay. So what we're trying to channel here is this. If the market's going to go bearish, then it's going to go bearish.
Okay.
Why would we want to wait to see if price breaks this level first? It's come close enough to this level for us to make a decision to go break even. Granted, the price could pull back and stop us out, but if it does, that means at this moment in time, there's not enough volume to push this market down because it's reacting to this key level at 0980.
Right. But sometimes have you not seen it to where it will go up and then it'll leave a huge wick?
Doesn't matter.
And then continue to go down? Like this here?
You're creating scenarios. You're not trading the process.
Right.
So let's say we take 5 trades on this live session. You get 4 break evens because you went stop loss quite aggressively to manage your risk. But then we take 1 trade, it hits 1 to 5. Would you not be more happy that you took 5R out of the market versus worrying about the trade turning around, hitting break even, and then going in your direction?
Right. Yeah. Okay. You're right.
So when we do these live sessions, it really obviously highlights your chain of thought, and it helps me to see how you think about certain scenarios. Now, in a scenario like this, when price is starting to fail to break this level, what could that mean?
That means that could possibly mean that it's not going to go in the direction that I want it to go in, and that EU might not be as weak as we think it is.
And the volume to the downside is not as
strong,
active at the moment. Yeah.
Yeah.
So now
see, for me at this point in time, if I was watching this like this, I would have probably moved to break even because of, I guess, let's be honest, fear of the trade not going in the direction that I felt it would go in.
Okay, but now we don't want to trade like that. We want to trade.
No, of course not. I was just saying. I was just being honest with you.
No, I appreciate it. But we want to trade with a thought process we understand and makes sense.
Right.
Okay. Because if you allow fear to make the decisions for you, then the problem here is that in the long run, you're not going to have something that's going to be sustainable to consistently make you money.
Right.
Now, what we don't care about is what the candles are doing, where they're going. We just want to see the market moving in our direction to initially take the trade and then manage that trade.
Correct.
Okay. Now, notice with this stop loss as well, we haven't risked 1%. So most of your losses are 1,000.
Yeah.
In this scenario here, we haven't risked 1%.
Right.
Because we're using a 2-candle theory concept here. If the candle closes bearish, the next candle will be bearish. And then we're looking to take advantage of the volume down. So granted, because we're using 10 lots, it's going to take 20 pips for us to make 2,000 or 30 pips to make 3,000. Whereas if you were to risk 1%, we probably would have been at around 2% profit already. But then with this small stop loss, if we lose, we only lose about 100 versus 1,000. But if you risk 1%, you'll lose a whole 1,000 in this small stop loss. So do you understand the two scenarios there?
Yes.
So you have to make an informed decision on how you want to trade. And personally, I think this is the best way to trade. Because now you have wiggle room. If you lose this trade, your day's not over. You've lost $100.
Right.
And once you manage that trade, you can then start thinking about taking partials, trailing in your stops, and holding the market down to where you believe it's going to go.
Right.
So once we get this trade to manage, then do you know what we can do next? We can now start identifying where we want to see the market going.
Right.
So now what's happening and what's your chain of thought?
It looks like it double topped right there.
So if we keep it even simpler, price failed to push bullish again and we're pushing back bearish.
Correct.
What's our next step after entering the trade?
Set the break even.
Trade management.
Management, yes.
So let's go. We've pushed deep into that level. There's no point holding that trade and waiting for it to turn it back against us, okay?
All right.
So now we want to see price get to our next target, which is that structural low. We'd want it to clear this level because we know this is a problem. We can get comfortable again once it starts breaking this low, because we know that once price breaks the low, there's a high chance it continues bearish. And then we can start scaling up to look for our targets. At the moment, we've just got a free trade running with zero risk. And this will either be the trade that works out for us today, or it'll be the trade that takes us out break even. And then guess what we have to do?
Start another trade.
Correct. Same process. So our next chain of thought now is to wait for price to get past this troubled area. Okay. Because it's been failing to break. So we know that it can bounce off this level and fly back up, takes out break even, which means we need to reset and start the process again. But if it breaks below this, we can have a little bit of a breathing space, and then we can scale up to look for higher time frame targets. Okay.
All right.
Once we find it, we can set our take profit, and then we can let the trade play out, because after that point, there is just nothing we can do.
Okay.
Is this making sense?
A little bit. As far as the scaling up part that you said, you're saying
scaling up to like the 15-minute time frame to then look for an area in the market. So it looks like there's news, but that's fine. We've got that trade to break even. Okay, so we don't want to be in the market because right now there is news.
Good gracious. Well, that screws up.
Press sell here.
Press sell.
Press sell. And put your stop loss above the previous candle high, please. Yeah, no, it's too high.
Oh, previous candle high.
Okay. Yeah, it does. It does mess our session up a little bit, I'll be honest with you. Because we wanted structure to work with. We don't have it.
Yeah, definitely.
Which is a bit of a shambles. Because the whole point in the session is just to help you to identify how to simply trade the 1 minute time frame, just using two key levels and just simple theory of two candle concept. So like this trade here now is the simple theory of a two candle concept, which is the previous candle closed bearish. So now we just take a sell in anticipation of the next candle going bearish. But I also took this trade knowing that after a strong impulsive move, there could also be a correction of that move. Do you understand?
Yeah.
Okay. So we add a confluence to that two candle theory, and that's what I wanted to teach you today as well, based on key levels. We got ourselves into a good trade and we got that to break even, but obviously then the news just came and messed us up. In this scenario here, we do expect price to continue bullish because obviously we can see across the board that euro is showing signs of strength. But what we want to see in the next 15 minutes, bro, is just for this market just to find some support levels, and then we can start trading based off that again. Okay.
Okay.
So if I took this trade in the live markets, what I'll be saying to myself is I expect price to come back down to at least this level here. And then once price gets to this level, I can make a decision what I want to do. So now at this stage, what would you do?
Knowing me, it'd be at a 1-to-1, so I'd set it at break even.
Okay, let's go. Now at this stage, all we're thinking to ourselves is the previous candle closed bearish. The next candle we expect to go bearish. That's why we took the trade. The next process is management, which is now break even. And now the next process is just waiting to see if the market continues to our target, which is where that box is. Okay. If we get stopped out of this trade again, we don't lose anything, probably lose on commission, or if the commission.
Yeah, commission.
And that's it. And
now, would you recommend in this situation, what I've been doing here lately is it helps to trade on the computer better than the phone.
100%.
You know, but at least on the computer, I can see essentially what the cost of everything is, and I'm able to set break even very easily than to set it on the phone. But I've been setting my break even to cover the commission costs, which sometimes can be a bit lower, obviously, than where my entry was. And
I mean, Hugo's way commission is ridiculously high.
It is, yeah.
It's a shit broker.
Yeah.
I didn't even know.
It's just kind of what I've been. It's basically what I've used coming from all the other groups, man.
I didn't know you was on Hugo's way, to be honest with you. I would have told you to go buy BST markets.
I've never used them before, so I didn't know about them. Like
lower
I said,
spreads, lower commissions, everything.
Really? I'll have to open an account with them, man.
You certainly do, man.
Yeah. I see markets. How are they? Well, obviously, if you're using them, they're good.
Everybody uses them, bro.
Okay. I was using, like I said, I was just using from previous group. I know I know some of these brokers, especially when it comes to US, some people have issues getting their returns and all kinds of stuff like that. So I was picky on what markets I were using.
IC markets are the best.
Okay. I'll definitely open an account with them today.
Top dog broker, and everybody uses them.
Okay.
So now we're back at break even. So we've got two break even trades. Now, what's happening in the market is price is now starting to find that support. Okay. So we now go back to process number one. And what we'd like to see is the market come back into this level, bullish candle. And then the process is in anticipation of the next candle, bullish, two candle theory, stop loss below.
Right.
Okay. Does this make sense?
It does.
Okay. So the trade that I took, this is not a trade you would take. I was just taking in anticipation of the retracement, and it's a trade that I would take. Now we're back to the process again. The market has created some sort of support, and what we're looking for is price to respect this support.
Okay.
If price continues to show signs of resistance, then we have a resistance, and then we look for bullish close in anticipation of a bullish continuation back to the highs. Does this make sense?
It does.
Okay. But if price starts to continue bearish and then breaks below this level, we'll go back to two candle theory, and we anticipate the market to continue moving bearish back down to these lows. Okay. Okay. So we don't know when this is closing because we don't have the timer on it, but get ready. If the market closes above this level with the new candle open, you buy and you put your stop loss below, because it was a resistance level where price held and is now breaking above, meaning that there's strong bullish momentum and we anticipate a continuation bullish. It doesn't mean it needs to continue bullish, but the point is this: there's a high chance that it will, and you want to trade in the direction of least resistance. So we don't take a trade now because we didn't close strong enough bullish.
Correct.
Sometimes you will sit here and see this fly up because you didn't get the candle close you wanted, but we're not trading based on what we want. We're trading based on what we see in past history. And that is, if a candle closes strong bullish above a key level, there's a high chance it continues bullish.
Right.
Now, this level can also act as resistance now because price is failing to break above. So as you close bearish, you could potentially look for sells. But now we've got too many scenarios. Because if you sell, you have an area where price can fail to break.
Right.
So it doesn't give you enough range. So what you want to do at this stage is you want to say, in this scenario, if we break close strong, I'll do the 2-candle theory and anticipate continuation higher. If price now comes back down to this resistance, support and breaks it, then I anticipate the 2-candle theory, and then I look to sell it. Now you won't buy for this level anymore because, again, the same theory is that there's too much range back to the high here. There's not enough range back to the high here. Does that make sense?
A little bit. So you're saying...
So we're looking for a break above or below 2-candle theory, and then we're looking for a continuation.
Gotcha. Okay. So if this closes bullish above, then we're looking 2-candle theory to buy. But if it doesn't and it continues to drop, we're waiting for it to drop below this level.
Correct.
And close bearish in 2-candle theory.
Correct. And the reason why I'm highlighting that now is because it's created a resistance.
Right.
Before, it just created this level. So we could look for the bounce. But it doesn't make sense anymore to look for the bounce because we have this as resistance.
Okay.
Does that make sense?
It does. It does.
So now it's just
generally for you, how many wicks do you like to see rejections essentially
a couple
before you consider it resistance?
I wouldn't say I'm looking for any amount. You're just looking for an area where price is struggling to break.
Okay.
So when it breaks, then there's a higher chance. Think about this. Every candle's your little soldier. If one of your soldiers managed to get over the wall, when there's resistance, there's a high chance you can continue running.
Right.
But if we start to see multiple wick rejections, then that clearly means that there is a wall there. So your soldiers are slowing down. So you might as well mark it as a brick wall sort of thing. Okay. And then just wait for price to break above to show you that, okay, I'm over the wall now and it's time to continue marching forward.
Right.
Well done. Now place your stop loss. And in this scenario, you can place it below just the wicks below that. Why? Because that's just the area. Okay. Now, what are we thinking about next?
Managing the trade.
Great. Where's our next management level?
Here.
Correct. This is your next management level after we've just broken above this area here. And now we're looking for price to continue bullish back to that high to manage the trade.
Right.
What are your thoughts right now?
It's showing that this level that it's at right now is a pretty strong level to break past. Even though we closed bullish there, it's still showing that level's pretty tough. But right now it's just really a waiting game. I'm either going to get stopped out or it's going to go in the direction I need it to. Correct. For me to set the break even.
Correct. That is it. There's not much more to think about.
Right.
Once you've entered the trade, you accept the loss. You've taken the trade based on the process that you're supposed to be trading. The market will either go in your direction or it won't.
Right.
In theory, what we would like is to manage this trade. If we don't, the outcome is going to be a loss.
Right.
And when you can accept that right off the bat, you can become very comfortable with trading. Even though it's not comfortable, this is how you have to learn to become comfortable. But again, for this session, what I want you to focus on is just the process of how we're thinking and how we're executing trades, and that's it. The process is waiting for the trade to develop. Next process is management, and then we'll move on to the final steps, which is targets, if we can get to it today.
Okay.
We had a little bit of a hiccup with the news, but we're still trying to persevere and see what happens. Okay.
All right. Yeah, this is really helpful for me, and I'm sure it, like you said earlier, it helps you get an idea on what my thought process is when
Definitely.
I'm taking a trade, because our first few sessions were a bit different. It was more along the lines of you getting me to be comfortable taking trades and doing the two candle theory and really kind of getting my mental together and prepared to be able to execute. And so to be able to do this process of it, like I said, is another step towards what I'm looking to do, because now I can kind of put my thoughts on the page to where you can see what's going on with me versus me taking these trades and you just seeing them on my FX book and trying to wonder why I'm taking what I'm taking.
Yeah. See, trading is not difficult in itself. It's literally just a matter of pressing a button. It is the thought process that leads up to the trade, and then you being able to identify this trade setups as being high probability trading setups or not, based on your understanding of the sentiment of the market, identifying key levels and structures and patterns that we know have previously worked in the past. And then after you've done all of that, the next phase is just simple management, i.e. removing your emotions and any distracting thoughts that you have, all these scenarios you have planned in your head, to try to eliminate them, and then literally just wait for the trade to play out.
You're right. It is a simple process, but we as individuals complicate it with the way that the brain is. I mean, it's essentially a supercomputer, and you come up with all. It's just like with other things in your life. When you don't know of a situation, your brain will create a ton of stories to try to decide something that you have no clue to, that you just don't have an answer for, but your brain will try to come up with different things. It's like being
Yeah, I think as traders, though, we're all inclined to do that.
Yeah.
And I think it's something that runs in our blood.
Yeah.
I think it's part of our makeup as traders. You know, I'm a very positive person, but you know, I think you're always thinking of worst case scenarios every single time.
Yeah.
And that becomes very challenging when making or trying to make the right decisions. Okay, so we're moving nicely towards our intended direction. So we've taken 3 trades in total. We've probably been up about $2,000 with about $3,000 in all of our over provisions and profits. But obviously, prices come back to break even. Now you can think about what you could have taken, but when we think of it that way, what we start to do is we start to make decisions that are very impulsive, and they don't follow our line of thought in terms of how we should be trading. So no matter what we've let go of so far, what we're waiting for is not for price. What we're waiting for is to get into that right trade that the market ends up flying in our direction. So what should you be doing at this stage? Sorry.
Set the break even.
Let's go. Okay. Now we're so close to this level again. If we start breaking it, we can then scale up and we can start looking for targets. Okay.
All right.
So now again, you've lost, I think, 50. I think you've lost 100 on commissions.
Yeah.
That's it.
Yeah.
But you haven't lost your 1% for the day, which is $1,000.
Yeah.
And we're now floating 1,500 in profit. So you've lost 100 in commissions, or 150 in commissions. Let's say 150 in commissions. Okay.
Yeah. Yeah.
It's 3 trades we've taken. No, this is the 3rd one. Sorry, you've lost 100 in commissions.
Yeah.
Now, if you were to pull the plug on this trade right now, you'll be up 1,400 for the day. Catch 2 of these a week, and you've made 10% a month very easily.
Wow.
Okay. Now, remember what we've just done here. We've just focused on making sure we follow the simple 3-step process, which we haven't got on to the third step. We will in a minute if we close above this level. Now we can go to the next step, please. So let's scale to your 15-minute time frame. And now let's zoom out a little bit. Yep. Okay, so we have no information to the left here. Let's go to the hourly time frame. Okay, so now what we're looking at here is, where was price finding the most resistance? It was this level here. If price starts to break it, where could it go to next before it finds the next resistance? Here.
Yeah.
Okay, so let's drag our target to that next level. Yeah, now grab your TP and just fry it up there somewhere. Just fry it up. That's it. Now move your stop loss back to break even. Just over. That'll do. And now go back to the hourly. Yeah, and now, yeah, you know what to do.
Oh yeah, I'm there already.
Oh, so I can remove my lines now. And how much is our TP?
Nice. $3,200.
Okay, fine. So let's go to the 30-minute time frame, because we don't want to see all these 1-minute candles anymore. It's a bit long.
Okay.
Okay, so now at this stage, all we're waiting for is the final stage. So we've identified the trade based on our process, which is the first step. We've managed our trade, which is the second process. And now we've set our target based on the structural high, which is our final step. Now you can just walk away from this trade, because whatever happens. Remember, all you're looking for is for the market to continue in your direction, and that is it.
Okay.
So now at this stage, if it comes back to break even, are we going to feel pissed? Certainly are. Is it going to hurt us emotionally? Probably is. Or affect us emotionally? Probably is. Is it long? Absolutely is. But it is what it is. Okay.
Right.
So now we have a
At least
target.
it's not a loss.
Correct. So if we hit this, if at the moment we've invested $100 today, we've taken 3 trades, we haven't lost anything. We've invested $100, and if we win this trade, we invest 100, we come out with 3,000, because we've put risk before reward. Does this make sense?
It does.
Okay. Now, some days you're going to have the market conditions where they absolutely just fly in your direction and you're laughing all the way to the bank. And then you're going to have some market conditions like we're seeing today, where the market is just not finding the volume. Now, what we want to do as a trader is just follow this process every single day. Some days we'll hit targets, and other days we just won't. Does this make sense?
It does.
But because we use a positive expectancy in terms of risk to reward, the days where we hit, we make a lot of money. And the days where we lose a little bit of money. Does that make sense?
It does.
Okay. So it's a shambles to see this come back, but it is what it is. So we continue the process. We go back to the 1-minute time frame. Now, again, what we want to do here is we want to mark our levels. So this is where price is reactive from and is phased to make a new high. So we're going to wait for price to come back to this level to give us what? Potentially a
buy or a sell.
So buy.
Or if it breaks above and closes bullish, then we're looking for 2-candle theory to buy. But if it gets up here and closes bearish, then we're looking for 2-candle theory to sell to this level.
Correct. So now these are the levels we're working with. Okay.
Okay.
So again, what are we doing if price comes back to this level?
We're waiting to see if it closes bearish below it and look for 2-candle theory, or if it bounces off and closes bullish, we're looking for 2-candle theory to buy to this level.
Correct. Are you understanding the process, how we look for?
Yeah, I'm seeing it now. It's crazy. This opened my eyes up a bit more. So while I got you on here, if we were down here, we wouldn't really be touching this, would we?
You wouldn't know that this would happen.
Yeah.
What you would know is that there's low volume in the market, and that's a decision you have to make then to walk away.
Right.
Do you understand?
Yeah.
At the moment, we're seeing quite big volume candles, which means we know there's volume in the market. We just need to get in a trade and follow the process again, and hope to see if we can get a trade that really rallies in our direction.
Right. So in this process, we're just waiting
Yep.
for it to hit a level. We're not taking a trade in the
No.
middle or anything. We're just
No.
waiting. Okay.
With this structure, yes, because we
Yes.
haven't got any key levels that have developed yet. If we start getting strong key levels and lower highs or higher lows, then we can start using those levels. But at the moment, we don't have any levels to work with until other than these extreme levels.
All right.
Now, do you notice we've been trading for about, let's say, 50 minutes now, or 45 minutes, let's say. We've only invested $150 into the market. We haven't lost 3 trades, which
Right.
if you were risking 1%, and you left your stop loss open, or you got emotional, or you didn't want to manage it, you potentially could be down 3% now, which is $3,000.
Right.
So when we're down $150, again, that's not nice, but think about it. Your next trade could be $3,000.
You're right. That's
or one of those trades could have been the trade that moved in your direction, and you would have only just taken one. But this is what you have to do on the 1 minute time frame. You have to be aggressive with your risk management, because there are times when the market will push in your direction and it will come back on you because it hasn't got a direction yet. All you're simply waiting for, remember, is just one strong 15-minute or 30-minute candle in the direction you take the trade. And that's it. You're laughing all the way to the bank. So at this stage, all we're doing is trying to get in at the earliest sign to take advantage of the biggest range of that move. So look here, if we weren't in buys at this stage, we took buys above here. What we could have been doing is we could have been waiting for price to come back to this level to see if price reacts to this level, breaks above or whatever. But I'm just saying, I mean, you probably would have taken buys here, but look, you have another bearish close at a level. I'm not saying we would have taken this, but then now you'll just be at break even again. And now we will be vouching for price to break this level. Does this make sense?
Yeah.
That was a really good trade we got in here. Really good trade. We just couldn't get that final volume we needed to the upside. We really just needed a push.
Right.
Now, would you buy?
But I mean, if with us risking, no, I would still wait till it to get to that key level, because it could just as well continue to drop at this point in time.
So what we don't want to say is those kind of things, because it could. We have to define our rules, okay? And you have to say, in order for me to take a trade, I want price to dig deep into the key level.
Okay.
Yeah?
Yeah.
We don't want to make these scenarios up in our head.
Okay.
Or any scenarios. So the rule of thumb is I'm waiting for price to dig deep into my level.
So we're not creating the story. We're allowing the market to create the story, and we're just following along.
Correct. We're just reading the book, and then...
Right. And the story itself unfolds as we read.
Correct. Either good news or bad news.
Right.
Whilst trading on this live, do you feel more composed?
I do.
Mm-hmm.
Especially just kind of being able to have you help me out with my thought process, because at the end of the day, you can tell me, hey, this is 2 candle theory, get in at the wick, do this, do that at this level, set such and such to here. But to essentially, it's like having a coach on the field. The football player knows to hit. The football player knows what they're supposed to do. But without a coach, you're not really going to discover your full potential or what you have. I mean, you could be naturally talented.
Sorry to cut you. What are you thinking about now as prices at this level?
I'm still waiting on price to dig deep into that level a little more, or give me a strong bullish close.
See what we're doing? We're just waiting for that one trade that moves in our direction today.
Right.
When the market conditions are good, it will move in our direction because price will go up and price will go down. When the market conditions are not good, it won't. And one determining factor you need to decide on when you're having your sessions is, what is my burnout level? Do I feel mentally and emotionally exhausted? And if you do, then guess what? You walk away from this. You walk away from the trading session, no matter what your results are.
Right.
If you're running hot and the markets are good, or you've had one good win and that's enough for you, you walk away.
I bought there.
That's fine. Doesn't matter. We're not looking for perfect entries. Good stop loss placement. Okay. What's the next plan?
Next plan, we wait for it to get to this level, and then make a decision from there, or it stops us out.
Correct.
I've taken some trades on this, and what sucks at times is when I click to get into the entry, where the spread places me at versus where I want it to actually be.
Yeah, I know.
It hurts.
It's very painful. And what we're doing in this situation, we're giving ourselves the best possible opportunity to extract money from the markets. Okay. What we're not doing here is we're not getting emotional. We're not revenge trading. We're not doing anything silly. We're being patient and just trading the process. And I keep highlighting this, but it's very important. When the market's moving in your direction, you make shitloads of money. When it doesn't, you identify that the markets are a bit rough today and you make a decision to walk away. All we're playing here is the numbers game.
Mm-hmm.
Not every day will the market be like this. Sometimes you'll just jump into a trade, it flies in your direction. Sometimes you jump into a trade and it doesn't. Do you know what I mean?
Yep, I definitely do.
But can you see how most of our trades have had an advantage in the direction we've taken the trade? I mean, let's keep it real. Every single one of them, we've got it to break even.
All right.
Now, is that going to happen every single time? Probably not. But why? Because we're trading a process of waiting for price patiently come back to key levels, looking for price to hold those levels, looking for that bullish momentum in line with the 2-candle theory and executing that trade. We're not taking random trades, which means we don't have random stop losses. Or more often than not, we won't have random stop losses.
All right.
Because we're always trading in the direction of least resistance, meaning that there's a higher chance that price can move in our direction because we're taking a trade based on a process. So it's only a matter of time before you take a trade and you're laughing all the way to the bank. Do you know what I mean?
I do.
Okay. Now, I'm not saying every trade we take, we're going to be able to get to break even.
Of course not.
But
that's unrealistic.
What I am trying to highlight is that we've taken the trades based on a very systematic process, and we have been fortunate to get all trades to break even.
All right.
So and that says something. That says something a lot about how we're approaching the markets.
Right.
Okay.
And I haven't even. Well, I think at this point in time I did, but the trades before I wasn't even risking 1%.
I mean, what's the risk on this one if you just hover over the stop?
It's about 1%.
This one is 1%.
Almost. Yeah. Almost.
Yeah. Okay.
Yeah.
Some of them will be a little bit more than 1%. Some of them will be a little less than 1%. Some might be a lot less than 1%. Depending on how the structures form or where the wicks are, etc., etc. Now, I'll be honest with you. If you didn't have to pass a challenge, guess what? You would have been taking some partials and profits along the way, and you would have been up a couple of grand today. Easy.
Easy. Yeah.
Very easy. So for me, when I'm trading my personal account, that's how easy trading is, because I don't have to go for a 10% target. You know what I mean?
Right. Right.
So if I'm feeling like I'm a bit tired today and a bit sluggish from the day before, I'd be like, you know what? I'm happy. I'll take 1400, take 500 here, whatever. And then I'll come back tomorrow. But if I'm feeling hot, a lot like focused and ready, I'll be like, no, today's a day where I'm going to concentrate more. I'm going to go break even. I'm going to hold for longer targets and we'll go for big risk to rewards.
Right.
Some days I come in, I'm a bit sluggish and I'm like, you know what? I'm just going to sell it to break even. I walk away, make a tea, come back. The markets have just absolutely flown in my direction.
Right. Some days you just take the bread you got. I actually like that when I was on the Zoom call when you were talking about setting a stop loss. It was a few weeks ago. And you were just like, which one of you motherfuckers are going to argue with me about making $1,000 in a day?
Yeah.
I was laughing. I was laughing so hard about that because I was like, yeah, seriously, like, who's going to argue about that? I was dying on the other side of that Zoom call. I was like, God, I'm glad I'm muted. Because I'd have been freaking laughing crazy on the call. I thought that was hilarious. Yeah, seriously, who the hell's going to argue with that? Most of us don't even make that at all.
Mm-hmm.
It's 365 a year.
Even now, bro, taking 500 is a blessing. Do you know what I mean?
Yeah, I made that's way more than I'm making a day.
Yeah.
It's not even close. So yeah, for me, it's nuts. So at this point, I guess this is something that I have to make a choice on. Do I set break even? Or do I set break even at 1-to-1, or wait for it to get to that key level before I set break even? I guess that's something that I'll have to kind of decide on my own.
But I'll help you. Once you're grand in profit near enough, do you want to see that grand turn around and then go into a grand loss, meaning you lose $2,000?
Definitely not.
No. So then, I think the decision is, we know if the market is going to really push in our direction and it's going up, that's all we want. Remember, we just want to focus on risk before reward. So we're going to go break even.
Right.
The element of this trade is that price respects that key level based on the 2-candle theory. And if you push bullish, then you continue pushing bullish.
Right.
All we're thinking about in the back of our mind right now is 1 30-minute candle status being bullish, and we just want you to continue bullish.
Right.
Does this make sense?
It does.
There you go, baby. And look, this is our 4th trade and another opportunity to go break even. Every single trade we've taken on this session, I know we haven't hit our winner yet, but we've been up and it's gone in a direction because we're following a simple process. So I personally, with this trade as well, we'll go break even. Remember, in the back of our mind, we're already $1,000 in profit again. There you go. Now, what's the next stage?
We wait for it to get to this key level,
and then we can start.
We can start managing it on the higher time frame.
Yeah, we can scale up to look
for
targets.
Take profit targets.
Mm-hmm. I mean, if we took the 1400 when price came to this level, 1500 or even more than that, actually, when it comes to this level, and then price comes to this level again, you would have been up 3% already,
Right.
But we're trying to follow a process here. We're not trying to make any rash decisions. We're working on the basic elements and the layers of this approach. And then once you get comfortable doing that, you can then start thinking about bigger targets, partials, etc., etc.
All right.
Now, on the next one-to-one session, I will talk to you about a very, very strategic and advanced take profit strategy that I want you to start using moving forward, as opposed to being a trader that risks 1% and tries to go for 3% every single time. What we want to be doing is making money. So if we were doing that now in the scenarios that we've been in, we would have been up. This is our fifth trade. Is this our fifth trade?
I think it's our fourth trade.
Fourth trade. Yeah. Okay. So if we use the advanced techniques that I will teach you on your next one-to-one session, you would have been up now 1,200 flat, even if you got all 4 break evens. You would have been 1,200 up. With probably more, because this one went to take profit. So went to this key level here. So I think you would have been up around 1,800.
I'm not going
with 4 break evens.
Yeah, that's nothing to shake a stick at.
So I'm going to teach you this advanced take profit strategy on the next session. But obviously the main focus now is just to practice this 3-step layer and get comfortable with it.
Right.
And then on the next session, we'll go over that strategy, which will be another live trading session. Okay.
Right. Yeah, I just looked at the history, and this is trade number 4.
Yeah.
And they've all been break evens, which to me is huge, because they could all very well be losses. That could be 3% loss already, and which wouldn't have happened because I would have been done for the day after 2% loss.
Okay. So because this is trade number 4, we've invested $200 so far into the markets. Okay. If we set our TP at the structural high, if you drag the TP to the structural high, keep going, keep going, keep going, keep going. Yeah, there. What is our target?
1915.
Plus, what is it? Tell me, please. 1915, yeah?
Yep.
Okay. So because we're at trade number 4, I think that's enough trades for one session, personally. So if we hit take profit, our investment today was $200 into the market to make $1,915 with a deficit of 200. So we walk away with 1.7% for the day.
All right.
Now, if we have 1.7% twice a week, let's do the maths here. So we have 1.7% times 2 times 4.
3.4, right?
That's 13.6% for the month. So we might say, oh, this ain't a great day. I didn't make 3%, only made 1.7%. But you have these results twice a week for a whole month, and you make over 3.6% more than you need to pass a challenge. Now, how simple has trading become from this perspective?
Mind-blowingly simple.
Okay.
It's crazy.
Now imagine if we had a really good day today and we made 3%. How bad could tomorrow be if you know how to manage your trades like this and think like this? It can't be bad, because there's no way you're going to lose 3%, is there?
No.
In one day.
No.
Exactly. Now, let's say this was our second trade. We're only 2 trades into our trading day. We could probably now start thinking about bigger targets. But 4 trades in, I think that's a fair share of trades for one day. We know that the markets are, not showing too much signs of trending conditions. So don't you think that's worth the trade-off? 200 invested today for a return of 1,950, which is a 1.7% return on your day's trading. Twice a week, that's all you need. And you make 13.6% a month, which is 3.6% over the 10% target you need. How simple is that?
Incredible.
Okay. So let's hope. Now, of course, if the market doesn't hit our take profit and it turns around and hits our stop loss, then the worst case scenario is we've invested $200 into the market.
250 with commissions.
250, is it?
Yeah, yeah. Well, TP is at 34. It'd technically be about 220.
Oh yeah. But this is trade number 4, right?
Yeah,
So, but in total, just all commissions is 50. I know we've put it into
yeah,
profit, but
yeah, yeah.
So it'll be two. Okay, fine.
250. Yeah. Still not 1% though.
No, wait.
That's a quarter of a percent.
Yeah, 1/4%. Why is it 250 and not 200 if this is trade number 4? Or is this trade number 5?
This is trade number 4.
So that.
So it would be 200. So right now we're at 150. We're at minus 150.
Oh yeah. Okay. Yeah. Okay.
Yeah, yeah.
Oh, okay. Yes, that's true. Sorry. Now, some of this, just give you a scenario here. Sometimes it could be really stupidly painful that this will fly through your take profit and head all the way up to the target where we was intended to go for on our previous trade, which is a $3 return. Yeah. But we have to ask ourselves, we've taken 4 trades. How much longer do we really want to be in the markets?
Right.
Yeah.
Right.
If we started with more, if we had more reserves and more energy, let's say, I'm not saying you don't now, but from a 4 trade perspective, let's say you was on your first trade or second trade, you'd have a bit more emotional stability. You wouldn't have had these scenarios of break-even trades and price pushing your direction in deep profit that you probably could deal with the hold. Mm-hmm. But now we'd probably just say to yourself, I don't care if the market continues in my direction or not. I've invested $150, potentially $200. Let's just say $200.
Yeah.
And I've taken 4 trades, been at the charts for an hour straight. I know that's not a long time, but I think it's enough. And if I could exchange $200 investment for $1,915 return, which is a 1.7 return, would I not do that? And I think in this scenario, you would say yes.
Yeah, definitely. Definitely.
And now it's just a waiting game. There's nothing we're thinking of now because we've decided that we're going to take TP at that high. So we just wait for that high, for price to come into that high or come back and get us at break even.
Right. It's a waiting game.
So that should have been my question. What are we doing now? Just simply waiting. There's no reason why price cannot continue to push higher here because we're not at a level where it should be reacting. So we are just looking for that final push. There you go. Okay. So let's do the maths here. We have netted today as a final. We have netted plus $1,715. I know it's not exact with a plus 1.7R 7R return. Percent return. Okay. And have out of 4 trades, that's what we've had. With 3 break even and 1 win. Okay. So this is our results of today. Pretty comfortable trading session, no?
Yes, definitely. Very.
Now we go away. We go and enjoy our time, our freedom. Again, who really makes 1,750 a day, 15 a day, you know?
Right.
Or even a month. So now
this was actually money that I was making, I'd be having a wonderful day today. I know that doesn't sound like much to individuals that make quite a bit more in the markets, but to me, that's life-changing money in so many ways I can't even imagine. Correct. Honestly.
And if you was at the stage, you don't need a 100K account to trade 10 lots.
Right.
Yeah.
Right.
And if you manage your risk aggressively, you really don't even need a big account to trade 10 lots. You just be aggressive with your risk. Okay. Yeah. So meaning that don't let the limitations in your mind think that you need 100K to make 1,715 because all we done today was just risk 10 lot per trade and managed it very aggressively. With a trading process, which every single one of those 4 trades went in our direction because we simply just waited for price to come back to those key levels and then use the 2 candle theory to take the trades.
All right.
Please watch this back.
I'm going to watch this so many times, man.